Washington's most predictable drama has flipped. For over a year, President Donald Trump branded Jerome Powell a knucklehead for refusing to cut interest rates.
And on a Wednesday, with new Fed Chair Kevin Warsh holding rates steady at his very first meeting and half the Fed signaling a possible rate hike, Trump's reaction from Paris was, and I'm quoting here, "It's all right, whatever." Now, in this next report, we decode Trump's Fed U-turn and more. Take a look.
On Wednesday, President Trump, referring to new Fed boss Kevin Warsh, said,
"Look, I have a very talented guy, leave it up to Kevin. But I've always said, and I've said it for years, when you have a country that's doing well, the market should go up. The market should, and the reason they go down is if it's doing well, people have said, oh, we have to stop inflation. And it doesn't mean inflation. In fact, it could be just the opposite."
The Fed left rates unchanged, with about half the members signaling the next move to be a hike rather than a cut. So Trump's comment is not policy alignment, but a relationship pivot. But the core substance has not changed. Rates are frozen. Inflation is at a 3-year high of 4.2%, and the Fed's own dot plot now projects a quarter-point hike before 2026 is out. What changed is the name on the Fed door. Warsh's first Fed meeting delivered a striking statement, which was stripped to just 130 words from the 341 Powell used at his final meeting. No forward guidance was given, and full employment was not mentioned at all. A single line highlighted the Fed policy path. The committee will deliver price stability. And that is a hawkish declaration, with 9 of the Fed's 18 officials now penciling in higher rates this year. Just one opted for a cut in the dot plot projection, and Warsh did not submit his own rate forecast. The market reaction was a deep sell-off, wiping out $1.5 trillion in 10 minutes flat. Economists at Deutsche Bank called the presser clearly hawkish and said the Fed is not pivoting towards Trump's demand for lower rates. Instead, the central bank is projecting higher inflation, driven by the Iran war's oil shock and pre-existing structural pressures in services, housing and healthcare. Trump now faces a Fed whose new chair he personally anointed, who is functionally independent. The bottom line, Trump wanted cheaper money. Instead, he got a hawkish Fed chair who has eliminated easing bias from the statement. The president's whatever is not indifference. It is the sound of a political argument quietly running out of road. That signals a strategic retreat, dressed as nonchalance. The midterm calendar becomes extremely important, as the real pressure on Warsh will begin if inflation is still above 3% by October, which at the moment seems more likely. Business Bureau, WION World is One.